Trading is one of the most competitive businesses where only 5 to 10% of people make it to profitability and even few out of them make it to consistency. So in this video, I will share the top 3 trading lessons with chart examples that helped me to go from a consistently losing trader for 3 years straight to becoming profitable in less than a year ever since I started using these principles. For those of you who stick to the end of this video, I will also share a bonus tip that has helped me to improve my win rate by 20%, which is not something chart related but can have a huge impact on your trading performance. So without wasting any time, let's get right into it. The first lesson which I learned over the past few years is not to trade with the trend always. Now before you guys start making false interpretations of whatever I just said, let me explain what exactly I'm trying to say. Look, I myself am an ardent believer of trading with the trend, and majority of my own trades are with the trend itself. I mean, we all have heard the saying that trend is your friend, which it is, but the problem occurs when we start to apply this advice in the wrong context. Yes, trend is your friend when your pair hasn't moved that much. If the average move of your pair is around 50 or 60 pips and your pair has already moved 70 or 80 pips for that day, it's not wise to follow the trend at that point of time. It's an overextended market which do not provide high probability trading conditions. Most of the time, after an overextended market, you either get a reversal or a ranging market. So you need to realize that structure-wise, in every impulse, you have an exhaustion phase and an expansion phase. Expansion phase, as the name suggests, is where the markets actually move impulsively in one direction. Exhaustion phase, on the other hand, is when the markets are exhausted from this expansion phase and there is a highly likelihood of either a reversal or a range. In the exhaustion phase is when you get some retracements before the markets expands again. So that is how the markets work: expansion and then exhaustion, then another expansion, another exhaustion. So majority of your trades should be during the expansion phase when the markets are actually moving, not during the exhaustion phase when the markets are either ranging or reversing in the opposite direction. Again, when it comes to understanding which phase you are in, there are multiple indications on charts. To better understand them, let's head over to the charts. Alright, so this is what I mean by an expansion and exhaustion phase. On this particular day, gold had moved around 200 or 300 pips in a single day. As you can see over here, price was in an uptrend and it did provide a lot of opportunities to go long. Like if you see over here, price broke out of this consolidation, gave a retest, you could have gone long over here. Another breakout, another retest, you could have gone long over here as well. So higher high, higher high, another higher low. And there are multiple other options to enter while this pair was going up. But by the time price had moved till here, price had already moved 200 or 300 pips in a single day. So what most people would do is that see price in an uptrend over here and think that, all right, so now gold is going up, it's in an uptrend, and we should look for long trades. And what happens after that? After price reaches over here, what do you see? Price falls back. Why does price falls back? Because this over here is an exhaustion phase. This one, as you can see over here, was an expansion phase, and that one was an exhaustion phase. So after an expansion, like I said, we always have an exhaustion phase. As you can see over here, price kind of started going down. And if you see this in the 4 hourly, it will be even more clear. See, over here, this was the exhaustion phase, back-to-back candles in the upside direction in the 4 hourly over here. And then after the expansion phase, we got an exhaustion. Where did this exhaustion come to? To this resistance level, which broke out and is now acting as a support. And now we can look for long trades from here since the markets are exhausted. And after an exhaustion, what do we expect? Another expansion. So instead of looking for longs over here, we should look for longs over here since the markets are already exhausted and now we can look for long trades. Another example that I have is on NAS 100. As you can see, first of all, in the 15 minutes, price breaks out of this consolidation and impulsively moves towards the downside. And again, there are multiple opportunities for you to enter. Like if you see over here, after the breakout, we had so many lower highs in the downtrend, and we could have entered at anywhere over here. But after price had fallen back to these levels, it also came to a demand zone or a support level, whatever you like to call it. And the worst thing that you can do is to still look for sells over here since the price is in a downtrend. It's creating lower lows and lower highs. But you need to understand that price is in a downtrend, but we already had the expansion phase where we were supposed to take the trade. Now that the expansion phase is over and it also has reached a key level, it's not wise to look for continuation trades. And that is exactly what happened. We had this exhaustion phase. And like I said, what do we get after an exhaustion? Another expansion. And after expansion, again, what do we get? Exhaustion. Like you can see over here, previously in all of our exhaustion phases, markets was reversing in the opposite direction, which technically is a retracement. But over here, if you see after this expansion phase, we got an exhaustion phase in the form of consolidation over here. After this exhaustion was over, we got another expansion. So you should not be trading over here. Like I said, it is a low probability trading conditions. And if you see this in the 4 hourly, it will be even more clear. See, first of all, we had this expansion phase, and then we had this exhaustion phase where the markets consolidated. And while the markets were consolidating, again, where did it come? It came to this key support level or a key demand level, whatever you call it. It broke out of this demand zone and it retested before going back towards the downside. So you could have looked for shorting opportunities over here instead of looking for shorts over here after an expansion phase. So you have two confluences over here. First of all, the trend is in your favor. Second, you have this area of interest. And third, the exhaustion phase is already over. And as we all know, after exhaustion, what we get is another expansion. So make sure only to trade during expansion phases and wait during exhaustion phases like this. If you can be involved in the markets over here, that would be very good in the expansion phase or over here as well in the expansion phase. Don't trade during these exhaustion phases where you get these retracements, since there is a highly likelihood of you getting stopped out. Moving on to lesson number 2 is not to trade during ranging markets. Especially if the higher time frame is consolidating, you should not scale down to a lower time frame where the markets might seem that it's trending, but on the overall picture it's actually consolidating. You won't get much volume on the charts and will also be faced with lots of fake outs. Overall, there's no clear direction of where the markets are heading. So trading in between of a consolidation can make you feel stuck in a trade for hours. I mean, I've had multiple trades where I check in after every 2 hours and the markets has not made any progress at all. It feels sucks to be in a trade for 8 or 10 hours, especially as a day trader. If you're a swing trader, then it might be okay for you. But for me, naturally, my trades last anywhere between 5 to 6 hours. Though what I have found is that trading from the extremes of the consolidation can be pretty well, and to better understand them, let's head back over to the charts. This over here is an example of consolidation in GBP JPY, where you may feel that probably price is in a downtrend since it's creating lower lows and lower highs. But if you have a look, it is in a consolidation for 1 to 2 days, I guess. And if you look for trading opportunities during this time, like if you scale down to the lower time frame, for example, the 5 minutes, what you will see is that we have an unclear trend over here. So what you'll get is lots of fake outs during this. Since let's say you feel that probably GBP JPY is in downtrend and it created this lower high, you may have taken this trade and would have targeted lower. Price did fall a bit and then it stopped you out. Again, another trading opportunity over here. This was the lower low. This was the lower high. You could have shorted over here. Again, price wigged you out and came towards the downside. Another lower high. If you would have shorted here, another stop loss. So you see that we don't have clear volume during this consolidation, And most of the lower lows or lower highs, or the higher highs or higher lows that you get during this consolidation will lead you to fake outs and low probability trades. So if you're a beginner trader, I would advise you to completely eliminate trading the ranging markets. If you have been into the game longer, then you can try trading from the extremes, trading the reversals, but always remember those reversals should be from the extremes. Now on to the final lesson is the times of the day you trade in. Previously, even if I followed everything that I shared throughout this video, I would still be stuck in certain trades for hours. That is when I realized the importance of trading times and how it is related to the volatility of the charts. There are mainly three sessions, namely the Asian session, the London session, and the New York session. Majority of your moves, I mean 80 to 90% of your moves will be during the London session and the New York session. In a single day, either the New York session or the London session will have the highest moves, or exception cases is where you have both the sessions having high volatility moves. But our focus should be to trade only during these sessions and not be stuck during Asian session, where most of the times you get a consolidating market and a low volume on the charts. So our focus is only to trade during either the London session or the New York session. To better understand them, let's head over to the charts. For this, we will have an actual look at the charts. I have this indicator which marks out the Asian session, the London session, and the New York session for me, and we will use it as a reference. So as you can see over here, during the Asian session, price did not move that much, and we only got 12 or 13 pips during the Asian session. But if you compare it with what we got during the New York session, this we had 72 pips of move during the New York session. Again, during the London session as well, we got 20 pips, which is more than the Asian session. But like I said, during a particular day, you will get high probability or bigger moves in either the London or the New York session. And this is not the only example. Let's go back and have a look at a few more examples. This over here, the Asian session did move a bit over here. It was an 18 pips move. But during the London session, we got 25 pips. And during the New York session, we got another 30 pips. Again, we did not have much movement on this day, but still the London and New York session presented more pips as compared to the Asian session. Another example, if we have a look over here, during the Asian session, we moved 16, 17 pips. During the London session, the pair consolidated, and the New York session, it gave 25 pips. So again, it's more than the Asian session. And we can go on and on. Like if we even have a look at the current price action over here on GBP USD, the Asian session is consolidating, and we can have an expansion during the either the London session or the New York session. So our focus should only be to trade during the London or New York session to catch most of the moves like over. So make sure only to trade during London or New York session to catch most of the moves. If you want even more volatility, then you can trade during London and New York session crossover when both of the sessions are active, which implies higher volatility. This way, you're also limiting your chart time where you are putting in less hours to catch bigger moves. Now, as we are talking about how you can make more money with less time spent on the charts, let's move on to the bonus tip which helped me to decrease my screen time while at the same time increase my overall profitability. So I was getting more outputs for lesser inputs. I know it sounds too good to be true, but it's the truth. What helped me increase my win rate was not sitting in front of the charts 4 hours every day. Instead, what I found out is that our human brain can only take 1 or 2 quality decisions in a single week. So after 2 decisions, you end up overwhelming your mind and start taking bad quality trades, which in turn decreases your win rate. So what I found useful is to set a max number of trades that you can take in a week. For me as a day trader, I found that 2 trades was the sweet spot for me. For some of you who are scalpers, you may have 1 or 2 trades per day. But don't forget to set the max number of trades that you can take in a single day or a single week. Simply setting the max number of trades you can take in a particular week or day helps you to shift your focus on A+ quality trades since you don't have much shots in the basket. It also helps you to deal with multiple psychological issues like revenge trading or over trading. So a simple rule of limiting your trades can give you so much benefit. It's amazing. Give it a try and let me know how it works out for you in the comment section. So today we talked about how you can increase your performance on the charts. But as we all know, technical knowledge alone is not enough to make you profitable. As far as profitability is concerned, there are various other factors that come into play. If you want to know what exactly they are, then check out this video of mine where I shared the top 3 things aside of the charts that has helped me to improve my profitability instantly. I will catch you guys in that video. Till then, take care. Bye bye.